Good afternoon, everybody, and welcome to this edition of our weekly Broker Moves review for April 9. My name is Carl Capolingua. I'm the market analyst over here at Think Markets, and it is a pleasure to be with you as we delve into everything broker-related from the week that was. We'll talk about that and much more after we talk about the Think Markets difference, which is substantial $8 flat rate trades, your own holder identification number, unlimited phone support, no hidden platform or subscription fees, and for a limited time, 5 free trades for new account holders. Get onto the website and check out all the details there, but I think that's about 9 good reasons why your next ASX share trade should be with us. The agenda for today is to check out all of the ratings, upgrades and downgrades, price target increases and decreases from the big brokers, and then have a look at a few stocks of interest. Not a lot of upgrades to talk about this week, nor downgrades, as we'll see on the next slide. Just the one, Resolute Mining, the lucky stock getting its upgrade from underperform to neutral. Now, don't forget, each broker has a ratings system, basically what they think their clients should do with the stocks that the broker covers. So buy, hold, sell. Underperform, obviously, is akin to a sell. Neutral is basically the broker thinks that the stock is roughly fairly valued. In addition to the rating, they'll have a price target, which is based upon that valuation. And we can see that the change in the price target here has gone from 45 cents up to 50 cents. Now, that is an increase of about 11.1% in that price target. And it leaves about 4% upside from the current share price to where that price target is. So that's a bit of a key to unlock how to read these broker ratings. Macquarie reacted to the company announcement, just sort of discussing some of their mine life expectations and production targets, and largely well received by the broker. Not so lucky was Bluescope Steel getting a downgrade from buy to neutral at Citigroup. Citigroup did, however, increase the price target for the stock from $19.50 to $21. That's about a 7.7% increase, but only about 3.7% upside seen from the current price to the target. And that was the gist of what Citigroup had to say about Bluescope Steel, that the stock is starting to look more fully valued. They did, however, say that the fundamentals are very, very strong indeed. The business is going gangbusters at the moment, particularly in North America, and steel prices are on the rise, and spreads, the profit margin for the company is way, way up from where it was in the midst of the pandemic. So fundamentals looking very positive for Bluescope, but the share price has appreciated in response to that, and therefore the company looking a little fully valued at the moment. Okay, let's go through the price target increases from during the week. So ratings stayed the same on these stocks, but the price target changed. I'm just going to pick out the bigger ones here, and as I always say in these presentations, feel free to press pause at any time and have a look to see if your stock's on the slide. Let's have a look at Ainsworth Gaming Technology. UBS increased their price target by 16.7%. That sounds pretty good, but that target is still well below where the share price is. So the broker foresees the price coming down to meet that price target by around 53%, and it probably explains why the broker has retained their sell rating. Brokers cited improving conditions in Australia and North America, but said their Latin American operations have basically been devastated by the pandemic and its ongoing impact. And whilst that was the situation, risks were too high to recommend anything else but a sell on the stock. Looking down the list, fairly modest increases there from Aristocrat Leisure, heading down the list into Bank of Queensland. There's that one from Bluescope Steel we saw earlier on. Quite a bit of upside seen on Hub Financial from Credit Suisse, but only a small price target increase. Probably the biggest one is down the end there on Resolute from Macquarie, which we've already discussed the rationale for. Into the next slide, South 32 got 3 price target increases of up to about 10%. And a fair bit seen still in the stock from here. 27% from JB Morgan is quite impressive. Still 13% from Morgan Stanley and 10% from UBS. Ratings from the brokers at buy, overweight and buy. So brokers pretty positive. News out this week that the company has progressed in its negotiations to sell its South African energy coal businesses. It did have to increase the concessions that it was providing. However, most brokers were pretty happy that the deal is now much more likely to get done. And if it gets done, that's a good thing for the business going forward. Look, it is our stock of the day, so we'll pause there. We'll have a closer look at that one in more detail a little bit later on. Having a look at the price target decreases. Now, AMP still in the doldrums. JP Morgan reducing their price target by 11.7%. They're still seeing some upside there. Nothing too specific from JP Morgan on that one, just citing news during the week that the CEO would be stepping down once one of their asset sales would be going through, but that's all as expected. It's just, I guess, the broker catching up to the share price weakness in the stock. Afterpay getting its wings clipped a little bit at Morgan Stanley, but still a fair bit of upside and an overweight rating there, so I wouldn't read too much into that. Looking down the list, nickel mines at Citigroup, they've had a good look at this. It's a fairly recent development that a Chinese nickel miner and refiner has found this way to turn a very basic nickel product into battery grade nickel. And of course, the nickel price was on a tear because of this view that electric vehicles are on the rise, they need batteries and they need nickel. CEO of Tesla, Elon Musk, has come out and said we need more nickel. And this kind of just changes that dynamic. So basically, almost overnight for the market, we've got this potentially huge increase in supply of battery grade nickel, with demand potentially increasing, but no major change to the expectations there. Increased supply, consistent demand, prices have to go down. The nickel price fell about 19 to 20%, and putting all that together, Citigroup has obviously reassessed their view of nickel mines, and we've seen a 11.8% decrease in the price target. Still about 10% upside seen in it. They're neutral on it from here. Net wealth, there was an announcement during the week that they would not be earning interest on certain balances because interest rates are very, very low. It's going to have an impact on their bottom line, and we saw Credit Suisse downgrade the price target there by 17.7%. That's quite substantial. Only about 5% upside seen in it after that downgrade, and the broker is neutral on the stock. Rio Tinto, that's a really interesting one actually. So 17.5%. We don't usually see such big moves for the big miners like this, but from 126 to 104, you're definitely going to take notice of that. And what's more, the broker's still thinking that the stock is overvalued. We're talking about UBS here, and they changed their price estimates for iron ore going forward. They think that we're getting close to an inflection point where iron ore prices are probably going more likely to fall than to rise, just the supply-demand dynamics there in the iron ore market, and Rio would be adversely affected. The broker also said they prefer South 32 in the larger cap resources space, and on Western areas, Morgan Stanley cutting their price target by 20%. That's in addition to Citigroup's 9.4% cut. There was a tour of the company's operations during the week. Various analysts attended. Morgan Stanley were quite positive on what they saw, but said there are various execution risks that they're watching out for, but just an adjustment to the price target. But the broker's still retaining an overweight rating. Okay, stocks of interest for the week. EML Payments, they made an acquisition during the week. It's a company called Centennial. They do various payment solutions for the banking sector in Europe. Brokers were very positive about the acquisition. We're looking at Macquarie there. They raised their price target from 570 to 620, retained an outperform rating. They said that the acquisition provides the company with a growth option in the open banking sector. There were still some risks, however, out there that could undermine growth aspirations, but the broker was comfortable with the balance of those risks for now, hence the outperform rating. UBS, coincidentally, also raised their price target from 570 to 620. They retained their buy rating. They said they were pleased with the Centennial acquisition. Once again, open banking exposure through the subsidiary there, Centennial NeuroPay, gives EML access to a rapidly growing market. The acquisition also increases cross-selling opportunities and diversifies the company's earnings base, and there are some cost synergies to boot. Looking more broadly at what the brokers are saying, quite positive on this one. We can see 2 strong buys. So we're over here now. 7 buys, no holds, no sells, no strong sells. The mean target is 591, which indicates that the stock is fairly fully valued at the brokers, but that mean target will probably rise as some of these increases filter through. Looking at the fundamentals, enterprise value to revenue, not fantastic. PE is high at 64.82, but there is some growth in the business, and we can see that coming down in FY22 to 41. But I would still say this is not a cheap stock. Price to free cash flow is quite solid actually at 4.85, and the return on equity is absolutely excellent. So clearly the company is doing well in its operations, but the market is paying quite a high price for that outperformance. I'm going to give it a very, very solid B. Just on it would be higher if not for the PE there. So it's a tick here. It is a tick there, and the chart looks fantastic. So 3 ticks, make of that what you will. It is a stock we have covered in Think Technical before on the 9th of December, albeit that was at a much cheaper valuation. We have broken to an all-time high with that move above 570. I don't think you need to rush out and buy it. I do note this rising short-term dynamic support zone here, and I think if you get any sort of pullbacks into that zone, it might also coincide with a move back to this static supporter here at 537. So let's call it sort of around that 540 to 550 level. That might well be your buy point with some nice candles in there. But definitely a hold if you have it. Having a look at the next one, Incitec Pivot, not one we've covered in Think Technical, but the chart doesn't look too bad. We do have a newly established long-term uptrend. The short-term uptrend is still up, even though it is being challenged by this big dip here. But overall, look, it's fairly constructive. And not one I'd be chasing at this point, but there are some positives there. That big dip, incidentally, is to do with this announcement. So the company announced during the week further delays at its Waggaman ammonia plant. There were some issues previously flagged here. The goal was to have this plant online by mid-March. It's now looking more like mid-April. And the impact on the bottom line, I'm not sure if I've written it down there, but it is going to be about $36 million. Brokers, 3 out of 4 decreasing their price target. Not by a huge amount though, 273 to 270 at Credit Suisse, 320 to 310 at JP Morgan, 325 to 308 at Macquarie, and then UBS bucking the trend a little bit there, going from 285 to 305. The ratings are fairly positive. There's a neutral there at Credit Suisse, but otherwise JP Morgan buy, Macquarie outperform, and UBS buy. Generally, brokers were disappointed by this obviously delay, but generally also noting that rising fertiliser prices in the meantime would probably more than offset any negative impact. Still plenty of execution risk out there, just in the ways of what these ongoing problems mean and management's ability to deal with it. There's further scheduled maintenance of another plant coming up in the second half, so it makes it really important that they get this one back online. Look, I'll let you press pause and read those comments in more detail. Let's focus overall on what the brokers are saying. We do have an overall buy on the stock. We have 1 strong buy, 6 buys, 3 holds, and a little bit concerning there that there are a couple of brokers out there calling it a sell. The mean price target is about 285 and probably going to fall a little bit with these downgrades. So it would indicate the stock is pretty much fairly valued despite that buy recommendation. Having a look at the fundamentals, enterprise value to revenue looks pretty solid down there. The PE is certainly not as expensive as EML, but you wouldn't exactly call it cheap. There is growth in the business though, and that is going to fall to 16 in the next financial year. So that is a positive for me. Reasonable dividend yield, price to free cash flow is very, very good here. And return on equity, I would call that modest at best. Look, overall, I'm prepared to be very generous here and call that a B. And if we go tick, tick, and not bad, 2 out of 3 probably on that one. But I think the chart holds sway there, and what I said about that is I wouldn't exactly be rushing out to buy it. South 32 is the third stock of interest. We talked about that South African coal business divestment. They did have to kick in $200 million into a rehabilitation fund, so environmental, social responsibilities there, and $50 million to restructure some of the loss-making operations within the broader gamut of the businesses that are being sold. Broadly, brokers were positive, I guess. They're positive on the sale, so they want the sale to happen. I think that's what they're more focused upon than the concessions that are being made. There's one comment here saying that the costs are manageable. You can find it there, and overall they just want to get it done because it improves the company's social and environmental reputation. Again, press pause, have a look at the comments. We have overall got a buy on the stock, one strong buy, 10 buys. I think that's quite convincing, isn't it? 3 holds, just the one sell. Mean price target, 289. It's going to go up a touch given some of these upgrades, but it does indicate the stock is fairly fully valued. The fundamentals look pretty solid on that one. It's good to see the PE coming down so much because that indicates substantial growth in the business. And at 14, not that expensive, but at the moment not that cheap either. Dividend yield's fairly reasonable. Price to cash flow is quite impressive. Return on equity is mediocre. It might be a C+, or if I'm very, very generous, a B on this one, but you certainly would go tick, tick, and the chart I think looks pretty good. We have covered in Think Technical at 249, so we're a little bit ahead. I think if you're on that recommendation, definitely hang on to it. If you're not, look, I don't mind buying it here. I think you can get it on a pullback into maybe 285, but the things I'd like to look at, short-term trend, it's up. It's well established. It's supporting the price as we go. Long-term trend is up. It's well established. It's supporting the price. And we are actually coming into some pretty key resistance here. And if we can get above that, it does provide us a little bit of clear air to move higher. So, I'm going to go tick, tick, tick on that one. Oh, and that's it for today's session. You can catch all of our other market updates. That is news, views, and analysis in the market news section of our website. You can follow me or the Think Markets handles on Twitter if you like. And we do have some webinars coming up in a couple of weeks. We'll have our top 3 ASX turnaround stocks, followed the week after by our Ask the Expert session, where you get to bring your portfolio to the table and ask me for analysis. And then on the 5th of May, we'll do our fundamental analysis refresher. So you'll be able to decode all those fundamental bits and bobs that I just talked about for those 3 focus stocks. You do need to go to the website to register for those, so make sure you find that webinars page. The disclaimer before I leave you today says that everything we've discussed is general in nature. We are a regulated Australian broker. We do have some products that could see you lose more than your deposit. So please read this disclaimer very carefully, or give us a call if you have any questions at all. It has been a pleasure chatting with you today. All the best for your trading until we catch up again. Bye-bye for now.